All right, everyone. Fantastic to see you all here chatting away in the chat box already on my live show. Thank you for joining me. As they say, welcome to the show. All right, everybody, good to see you. Good to see you. How you doing? How you getting on in the chat? How's that looking? That goal that we've got 3 out of 10. We're going to be taking a look if we get to the goal today at the Fed news. We excited about that Fed interest rate news. We can analyze it. Got so much happening in tonight's show, though. So much that a little bit kind of like, can we get through it all? Think we can. Think we can. Got plenty to cover tonight, folks. It's happening. It's all happening. It's all happening tonight. Are you here with me right now? If you are, you better put a message in the chat box so I can see your pretty name in the chat box there. I can see Dashi, Homer's Ghost. We've got Kick-Ass Man. What did you say there? Thank you, Rocky and TradeSpotting, for all the efforts. Looking forward to the LPSN earnings call analysis today. Yeah, exactly. So that's one of the other things we've got coming up. Let's just have a wee hold to this. Wow. And we have the chart here in front of us. As we see, there's, of course, a big candles today. This is the 1 hour time frame, so you see these big wicks on this chart here. Nice big wicks, right? This is because, of course, interest rate day today. How you doing? How's everybody getting on? Thought we would also do a poll in today's show, so I better get that started pronto, right? And I'm going to use this as our identifier, right, for the poll, so that you can have a visual reference for it. Okay, investor, and then we've got trader as the two options. And I just want to know what everybody in the audience kind of thinks they are between these two, right? And when we get the poll results in, we'll try and make this box look something like what it looks like for folks. Try and make the whole visual aspect of the poll visible on screen. So we're going to set up this poll just now in the chat box. As I see, people are contributing towards that goal. 8 out of 10. We might actually get a chance to look at the Fed earnings tonight with the way that the chat is pumping. Good to see everybody in there chatting away so much. It's really happening in there. Nah. It says he's a trader. You're jumping the poll, man. Hold on a second, bro. I've got to set up the poll. Whoosh, says Ames. Lovely to see you, Ames. Always a pleasure. Right, so we've got here, like, the poll is what you are is there. How do you write again? So what would you describe yourself as? And what I thought as well, right, is that we would do this poll, and then we would then say, what would you like to be more of? If you were, if you're a heavy trader, you want to have more investing stuff, all that crack, right? So we'll find out first off, though, what people are, what you are, how you describe yourself, get a thing, and then we'll see what people want to be, right? What you are, and then what you want to be. Starting the poll now, right? Starting the poll now. TikTok. Oh, and we've achieved our goal. That's awesome. Cool. So we'll just do that right now. We'll dive in. We'll get the news about the amazing news about the interest rates, right? I'm setting another poll just now another goal for the chat, right? We'll keep it really easy. That last one, we just flew through it really easy, right? So this is a good old goal we've got coming up, and it, of course, is will we take a listen to the earnings call or not, right? We'll check in on it. So if we get that goal really quick, then I'll be prompted to go back, and I'll not forget that the earnings call is playing, right? Because we don't want to miss that. So here's the earnings. Here's the Federal Reserve chat. Okay. We've made it into the show, everybody. Have you tweeted that we're live? It's the first few minutes. You have to get through the first few minutes, saying hello to the chat and everything. Got Luke Spears contributing. Cheers, pal. Got 10 likes on that, by the way. Look at that active chat box today. The Federal Reserve warns of rising economic risks as it holds rates steady. So we'll be all right if we hold the rate steady, says the Fed. Uncertainty about the economic outlook has increased further, even further, more uncertainty about economic outlook coming up. And the reason is, of course, because of all this crack that's going on in the world, right? At the minute, there's risks of higher unemployment and higher inflation. So they're caught, on the one hand, if inflation goes up, what you do is you put interest rates up. On the other, right, if employment goes down, what you want to do is put interest rates down. That's kind of how it is. So you've got a tug of war on the go at the minute, being dragged this way, being dragged that way. What way will they eventually go? The mood in the room is, let's get these rates down as soon as possible. But the data on the paper is saying possibly no. We'll just hold on for a minute there. Oh, okay, cool. So we did it. We got the news covered for the Fed. Hope I added a bit of value for you folks. I want to be able to hit heart on all of these, on all of the contributions to the goal that are flooding in, but they do scroll in very quick on the screen, folks. So if you're not seeing I've got a heart on yours quite yet, be sure to know that I have that heart. I have that heart for it. I have it. I'm all here for the hearting. And Bing Bong says, Karen earlier on, woohoo, what a day, says Dashi. We had Kick-Ass Man who was saying thanks to me and Tracepon, M. Devlin, XD, Merrick. Merrick, did you see the chat from Merrick over the last wee while? He's on the audience right now. Another trader/investor. How did you answer that, Merrick? Did you answer your trader or investor on that one? He was talking about a trade that he's been doing lately in the community. You know about it. You've heard about it. Is, of course, the trade for EVGO that he's been enjoying lately. And I wanted to give him a shout out in today's show. Just bring up the EVGO chart real quick. So you can see, oh, look at that 1 hour chart. Oh, it's got black candles on it. Yeah, you can see that, of course. But boom, wow, excellent stuff. We talked about this, Merrick and myself. I did it on the live show, you'll remember. So I'm not stealing your thunder here, pal. Not stealing your thunder at all. But I do want to, of course, give myself a pat on the back too. Because check it out. This is our target up here towards this area, and we've hit the target. And it's pretty neat to be up there. I'm just taking the old evidence of success off the charts. So all the impoverished, poor traders who can't get a win for the love or money won't feel jealous when they see how amazing that trade worked out. Isn't that right? Isn't that right? I've got loads of stuff to cover in tonight's show, by the way, and it's like, how are we going to fit it all in? I've got these amazing messages in my phone from Jamie, TradeSpotting. He's texting me these amazing things that I should be talking about right now. Need to check if this is playing. Okay, folks. So this is the goal, right? Are we gonna get this goal? Okay, there's another 2 goal. It's gonna be the tell you what Jamie texted me about. Right, simple goal. Okay, we've got 15 minutes because that's the lowest time that you're allowed to allocate to a goal. And we'll see if we can get that one, and I'll tell you what Jamie told me about in text messages on my telephono here. Here it is. Oh, look at that. So it's just a little bit of chat about that. A little bit of chat about that. Oh, a bit chat. Oh, look at that. Well, I'll cover this upon completion, upon completion of that goal. In the meantime, oh, I'm just so hyped today. Better not go overboard, right? Because I have, of course, a medical condition called chronic fatigue syndrome, post-sepsis syndrome. I've had a bunch of health problems, and if I go to balls to the walls here, I'll be burnt out in about 10 minutes. Rocky Outcrop is bringing the drama today. That's right, bringing the drama today. Great trade on EVGO, says Luke Spears. Shout out to Merrick. Got so many great messages in here. Quinny Genie cheering for Lipson. We've got Executive cheering for it as well. We've M. Devlin calling me a tease. XD, Japanese, they called for Lipson in the chat box earlier on. Sauce Food Cart, he's cheering out for Lipson. We've got a lot of support for Lipson in the chat box, so that's pretty cool. That's pretty cool. We're making our way towards the other goals. People want to hear what Jamie has to say about LPSN. And by the way, folks, what is the main we've got, like, this is kind of like your starter, your entree. Welcome. Thanks, by the way, folks, for supporting the channel. Check out that. We've just got another one in from 1,000 years of darkness. Wouldn't it be great on a really fun, entertaining, educational show like this that has like trade setups and all this chat about investing and trading, if there was like a kind of takeaway for you in the shows, like chat about what is money? What is money? Let's discuss what is money. Of course, I'm Rocky Outcrop. If you're just joining me for the first time, I dare you to hit that subscribe button, because what we do here in the show is create a rising tide of amazing traders and investors. Amazing traders and investors. We got this rising tide, and we do really good stuff every week. There's always a takeaway for you, and no matter what level you're at, and as well because us finance guys, right? We love chatting finance, and it doesn't matter if you're like a noob to finance or, you know, a pro like myself. If you've worked in the investment banks like I have, or if you've only ever worked at a cheese sandwich factory, it really doesn't matter, because we love this stuff. It's kind of like a book that I love. If you've been watching the channel for a number of years, you'll know that I'm a fan of the Wheel of Time book series, right? Grew up reading this stuff. I was dead hyped when they were making a TV show. I brought a whole bunch of new people into the audience, and I talked to Wheel of Time people all the time on the internet and on various live shows. Have you ever seen me in the live chat box on a Wheel of Time stream? Say hello. Finance people are like, whoa, don't make me tune out, Rocky. Here, the thing is, when the new people come in, I've read all the books and I've seen all this stuff, but I love talking to the newbies about it, and so does that entire community. The same thing exists in finance, you'll find, folks, by the way. Us experts, we're like, come on into the party, enjoy it. Let's all enjoy finance and get involved. Let's see, are they talking? Not quite. We're still in the Jazzy Jeff sessions. Do make sure that you like spam the chat if we miss that. So Jamie was talking to me earlier on, and he thought, we've covered this chat before on the channel, like in terms of I've teased it out a wee bit about what could we go into in details with people if they wanted to know about how LPSN would be looking and planning currently at the minute. And there were some big headlines that he was texting me. Anyway, this is my Facebook Messenger chat with my brother. Talking about, well, where does LPSN stand right now? Revenue is shrinking. This is something that we know about. So in the upcoming earnings call, we'll be listening for what the revenue figure is. And cost cuts are helping, right, at the same time. So we listen to what the margins are like. So in terms of the revenue for the year, they're predicting 240 to 225 or 255 in 2025, which is down from 2024. So the debt pressure remains real, 360 million in debt due in 2026, and they have like done loads of work on this. It's a whole episode it would be to talk about the work they've done on their debt recently. Management's focus, Jimmy's reminding me here to talk about management focus. Turn the ship in H2, that's the second half of 2025, and target a positive net ARR by late 2025. So we'll see in these non-GAAP accounting statements, like not standard chat, they have these funny things. So like in the hotel REIT industry, you've got like average revenue per room, RevPAR, and it's a performance KPI. And for the LivePerson guys, you've got this average revenue figure, which is of course ARR. It's one of their metrics, and we'll be listening out for their chat about that tonight. So Jimmy is also reminding me that the Q4 call confirmed that stuff about H2 2025, looking for that net positive ARR, is the priority. Let's just check here. So we had these reminders. What else was Jimmy reminding me about? Yes, here in this text message. Thanks, by the way, again to TradeSpotting for sending me this before doing my show. It's really, really helpful. What a great guy he is. If you don't know about how an amazing trader, investor, and educator, coach, and just all-around great guy my brother is, then you should definitely check out his channel on YouTube and watch him. Churn versus new growth battle. That's the big kind of headline there. Is the new growth going to overcome the churn? We've been given some guidance about this, and we're actually expecting it to be a bit rough really overall this time, because we're getting to the end of the of the churn sort of period, wringing the towel dry, right, and getting all that juice out of that lemon. So we're looking at other factors too, because in the last earnings call they talked about how they had landed a bigger fish. Just chatting, by the way, here right now, LPSN pre-earnings chat. If you're just joining us, we're going to be putting this on here and listening to the earnings call when it does come up. Hit that like button, all that crack. And I'm reading out right now some texts that my trader, investor, advisor, mentor, coach brother sent me. And we will be checking out into a few key things before we actually listen to the earnings call, just so we're reminded about a few key factors. Just so that we are all up to speed on what we got to do when we're listening to the earnings call. Now, like that's not really true. That's actually my job, I suppose. But you guys are here for the fun and the ride. So we'll be looking at their statements around the topic of their H2 2025 goals. We're going to be listening to whether or not they've landed any bigger fish, because in the last one we did get hints of that. Maybe we see an average deal size metric get mentioned. Okay, we've also got the 2026 outlook. What's going to be mentioned about that? We are in 2025 now, so there is some potential for them to give us a little bit of a peek past where they were willing to last time round on the Q4 2024 earnings. We're going to be looking to see the partner channels, right? Are they driving 35% of bookings in 2025? Are there more or less partner channels, people that are partners that work with them? That's what we're talking about there. I wonder if my goal won't be allowed to start by YouTube because I had a spelling mistake in it. Can't be. Give it a shot though. An error occurred. Please try again. Okay, let's try again. Let's try again, right? The list continues, right? So we're gonna cover a few more topics here about what we'll listen to in this upcoming earnings call, because it's happening this evening. We're going to hear from John Sabino and the others. The others is like lost again. The Dharma Initiative. No. We'll be listening to John Sabino, John Collins, and gang. Won't let me start a goal. If I refresh that. Have you tried turning it off and on again? Let's end the poll, shall we? Right? Let's end the poll, actually. Let's end the poll. Got our results in. It was actually 66-33 split in terms of investor trader. Where did my doodah go to? So investor trader, it was more like that. Interesting stuff. Let's check and see if this is playing yet. Nah. Interesting stuff. We're going to put in another poll then, and a goal, if we can do it. The next poll is going to be if we have, like, what do you want to be, right? What do you want to be? Do you want to be an investor or a trader? Gonna work this time? Yes, work this time. Okay. Whew. What do you want to be? An investor or a trader? So let's set that up. So you've already answered like how you would describe yourself already. And what would you like to be more of? An investor or a trader? There's no third choice in this poll. All you third choice lovers, I know, of course, there's a big contingent of the third choice in poll lovers in the audience. I know, I've seen them. Oh, the results are out. Jamie's texted me, helping me with my live show. Thanks again, man. That's awesome. We've got the reporters in the Discord coming in from El Jefe telling me that there is the information is out. It is out. It is out. It's out now, live on Discord. I know I could get the link from my message from Jimmy there, but let's open up from the Discord. Oh, is it just going to make it save? Is it? Save it then. And save it then. Here is the supplemental slides to go along with earnings report. This is good. This is the stuff to have up on the screen. It's the stuff to have up because, you know, oops, the wrong one. Because this stuff, it's kind of dense information, right? It's a bit dense, this information, dry numbers and words in it. That, by the way, there we go. Non-gap. That everybody got to see that in action. We're going to figure out, what do you want to be more like? What do you want to be more like, an investor or a trader? It is a difficult trade-off, isn't it? Is a difficult trade-off, because do you want to be in trades for the long term, or do you want to be in trades for the short term? Do you want to be holding on to losing positions for a longer trend trade over a course of years, get those capital gains efficiencies, think less about money? Or do you want to be faster and more efficient with your money, but then, of course, you have to be engaged and taking part in it. So we'll figure out what people want to be in the moment. We'll come back to this chart. We're opening up the LPSN chart to see how it's getting on with this information. Oh, that's a nice beginning. We're not going to get ahead of ourselves because chickens do not count themselves, right? Done the research on this. Chickens don't count themselves. So we're going to be waiting to hear what they say about it before we get into the detail of all of that. I have a goal running right now, as well as that poll. The goal is for the big money presentation. If we achieve the goal, then we're going to try and put in as much added value to it as possible. But regardless of whether or not we achieve the goal, we are going to be doing the money presentation. The thing that I wanted to talk to you about, in the chat, is, what do you think money is? Like, do you know about the history of money? Do you know what money means today? That sort of stuff. Let me know if you already know about money. And we'll see what we can cover in this lesson thing. I don't know, I guess. Try and come up with some interesting stories and whatnot to make it all relevant as we go. Hitting the heart on the like button to everybody who's been contributing to these goals is the most fun thing that you can do as a live show presenter. Got XD asking earlier on about banana phone. Dashi, Nick G making the party start and happen in here. LPSN here, folks, says Natural Friend earlier on. Cool, man. We've got Justin Pickerel. You've got Jay Hunter. Shout out to all on Discord. Keep being awesome from Chimpiang. Disco Biscuits getting in the crack there. Shout out to Scuba Gang from KX. And let's hear your brother's text earlier on. Jay, you were looking for that, and I forgot about finishing off the chat before we got round. So thanks for the reminder. See how useful chat is as well? You guys getting involved in the show. You're active. You're part of the show. You are the show. Without you, the show would be. The show would go on. The show would, I don't know. What do you say? We're going to be taking a look at the text from Jimmy, because there's a couple more points to look out for, right? Will we be seeing the cash looking like it's going to get tight in 2026? Do we need to delve into that, try and find some more details on what the cash situation looks like for the company? They might give us some more detail. We might see it trending down until we will see it trending down. How much sort of cash they've got on hand. But we know the looming kind of threat. Can you keep this much cash in your bank account? That's part of the conditions of their loan, and it makes people scared. The truth is, Jamie and I have worked through this and done the research on it, and we're not scared about that aspect because we've worked out what we think the runway will be come Q3 of 2026, which is, of course, at the time that these things mature. So these are conversations that we'll have with people, of course, over time. We're doing good for now. L. Baker Matthews getting involved. Yeah, that's cool. That's awesome. 2026 debt. So is it going to be more of a wall or a speed bump? The overall kind of question that people have who are kind of nascent investors, nascent, sorry, keep the language simple, to investors who were born yesterday, the kind of the expectation from a company is they're going to be able to pay off all their debt with all the profit that they're making. It's a nice fantasy. We have that from our kind of, our upbringings and the way that our parents always told us. Look after the pennies and the pounds will look after themselves. Never nudge your granny when she's shaving. And the other timeless advice that parents give. But is that the reality? Do companies actually do that, or have companies always got a bit of gearing on the go? Is it actually a case of trying to make that return on capital, return on investment, actually really shine? And if it is a case of that, which is, then the focus has to always be in all companies making profit. And it's just like, the nascent investors, and then they would pay their debts down with that profit. And it's funny how the more experience they get, the less you care about them paying down their debts with that profit. I mean, you want them to be getting good value on their debt. If they're got loads of cash sitting around and it's just stacking up, and they also have tons of debt and they're not using that cash at all, then yeah, pay off the debt, obviously, right? But when you get more advanced at looking at investing, trading, finance, economics, like we talk on the show here, subscribe. We know that the debt doesn't really matter. It's actually about if they're making profit. So if you're concerned as a nascent investor, like, guys, what are they going to do with all that profit when they make it? It's like, that's funny, isn't it? Because really, as an investor, what you want to see is the companies that you invest in making profit, and you don't really care about whether or not they have to pay some debt. It's just the cost of doing business, especially if it is the cost of doing business. It's only when you pay down debt that it isn't the cost of doing business. You just pay down that debt. It's not going to affect whether or not we do the business. It isn't the cost of doing business. You see? So that's literally what it is, which is fun. So we'll cover all of that and more in all of the videos that we do on these topics over time. We have one last reminders coming from Jimmy. He's told me, remember, Rocky, remember the bottom line. H2 2025 is the period for LPSN to shine. And right now, what we're looking for is diamonds in the rough. And the next time, we're looking for a roughage of diamonds. We're looking to see if we can get the no animals were harmed in the filming of this video. I swear to goodness that me slapping the desk there did no harm to any of God's great creatures. Do not worry about any. Definitely did not do any harm to any creatures there. So the whole chat, make or break, is that fair language or not? That's the kind of the question, but that's the kind of the way that the ruthless investors look at things, and they're looking at that and saying, is that the make or break period? I think overall the make or break period comes for them in 2026, 2027 overall, if there's going to be like an existential one. I don't actually think that existential one happens in 2025. But in terms of the make or break, where they've got past that point of any threat of existential problems, and we have, of course, then there's already been made. So it's like the make part starts second half of 2025, but the or break part would be more 2026. I've had to break it down. People contributing towards the other goal. We've got 10 out of hope this is audible. It appears that we have still some time to wait, but now we'll keep the background music, I suppose. For now, it's maybe we're looking at about 15 minutes time. We'll hear them coming in. So we'll turn off the easy listening. If you're at home and you're watching this show right now and you're not hydrated, consider becoming hydrated. It's a great gang. We're all part of the hydration gang over here, part scuba gang. There has been, of course, a bit of a drop here in price. We talked about this coming into this section of the show. We talked about it. We said we're not going to get carried away on this rise up that there was. And this is fairly thin markets, right now. Let's have a quick perusal of the docs. The docs we've got. By the way, folks, don't forget about that goal that's in the chat. We're 12 out of 20 towards it. The sooner we get to it, then the sooner I start, I suppose, on that. I'll preface it and whatever else. So that's kind of a peak reward. First quarter business highlights. That's good. That's what we'll be hearing about. Some bit of a financial update here. That's going to be good to hear about. Got go-to-market update. It's like that software they used to have, isn't it, for go-to-meeting. We've got Nick G. Way, cheers, man. Nick G getting us towards that goal. Got Merrick and Chimpiang doing it as well. Didek, time to look after those pennies. That's right, man. We've also got L. Baker. Yes, Latoya. $20. Check it out. Check it out. $20. Nice. Queen of the chat, L. Baker. Queen of the chat. Queen of the chat so far today. Go on, type it in. Yeah. So if you're looking to compete, then that's the one to beat right now. Excellent. Cool. So here we have the go-to market update talking about new logo wins and so on. We've got product update. So that's going to be good to hear about. Notable wins of the quarter. Oh, look at that. Spoiler alert. We have International Business Machines. Yeah, International Business Machines. We've signed up the International Business Machines, guys. That's right. IBM. Queen Jeannie. Wishing good health, Rocky. Feel better soon. Thank you. Check it out. International Business Machines. Not bad. I love those International Business Machines. You know what? If you'd asked me yesterday what I thought about IBM, I'd have said, oh, Big Blue. I love Big Blue. Great company. It's amazing. I love companies like Big Blue. And then if you asked me today what I thought of them, I'd say, I love them even more. I love them even more. Why do you love them so much? Because they're so big and they're so blue. among other reasons. So we have, let me just make sure I've definitely got my session here, extended trading hours. Wanted to make sure everybody at home could see I have the live up-to-date information on my screen. A lot of kind of these candles that might not even show up if you don't have the pixels on your device. So I'll just keep it on a slightly bigger time frame so that these look at that. That's depressing. We'll change it to this one. That's now really positive looking. It's all a matter of perspective, folks. So let's check out what else. What other spoilers? I don't want to get too many spoilers, right? See, this is the other thing when it comes to. I was chatting earlier on how I like a book series called Wheel of Time. I read them when I was growing up, and I find them super enjoyable to read again as an adult or listen to as audiobooks. And they made a TV show about it, and well done. Thank you, Amazon, for giving me like a childhood dream, and I get to watch that TV show, and it's fun, right? Just let me know in the chat box if you've seen it, and if you think it's any good or not. You can hate it if you want. You can hate it, and so as somebody who is a pro when it comes to the books, when I talk to noobs about it, I love talking about all the stuff that they're like yet to experience and so on, if they're up for spoilers. And if they're not up for spoilers, which is absolutely fine, and is what you go into the conversation trying not to spoil them, then you do, and it's fun and it's great and it's wonderful. However, big twist, when it comes to finance, I get to just overwhelm you with spoilers. And it's so great. It's basically the opposite, but you still love the interaction. Experts love chatting finance with the noobs and being like, spoiler alert, money's not real. Another fun facts. So we'll be diving into all these details. The deets. What are the deets? And the deets are coming here, ladies and gents. We're going to have our first quarter financial and operational highlights. They'll be continued from the previous page. And 2Q and full year 25 guidance, right? We'll not dive too much into that because that is future, that's guidance, that's spoilers on the spoilers, right? This is their own spoilers, intercompany spoilers. We don't want them. Spoiler alert. Spoiler alert. This is a spoiler level 10, ladies and gentlemen. If you've not ever heard of or seen money before, then be sure to tune out and go find out about how the world exists in the world, or something. I don't know. It's like North Koreans. They're the only ones who would actually need full spoiler alerts. Spoiler alert, North Korea. There's a better way of doing things. Everybody else in the world is like, yeah, man, give me more of that money. I know what money is. Rocky, I want to get rich trading options. When do you drop your options trading course? Says Pitta Annie. Has put a dono in with that. Man, we will announce when we will be announcing the options trading course as soon as we are able. We have plans, good plans. The plans are in place. We're working on them. We've got all these ideas are coming to us all the time. I don't know what we should be doing. We need to, of course, filter them down. We want to make it so that it's, of course, good for everyone and gives everybody a sort of foundational level in terms of getting everything right. No big leaks, no holes in the boat, and then building in real value on that. And we're on it. So we will announce when we're going to announce it, but we'll not get ahead of ourselves, okay? Because it's important not to rush ahead and deliver some inferior product in this, just so that you can do things, be on time. This is like, the kind of one of the big considerations right now for Americans, the world. You have to build before you can sell, right? And Shop of America is like such a big deal right now in the headlines, in the news. Trump was talking about Shop of America when he had Mark Carney next to him. And of course, you have to be able to build before you can sell. US companies are plotting a 500 billion share buyback spree. And all the news, ahead of the news, right? Because this came out 17 hours ago. And if you've been watching TradeSpotting, you will know, and we will have known for some time that this was coming, because Jimmy is looking around the corner. It's not a surprise to me, right? I see that it's a technical surprise every time that this happens, but how often do I see a news story come out weeks and weeks after Jamie or myself told you about this sort of stuff happening? It's surprising every time. But US companies are planning to buy back a record 500 billion of their own shares as they seek to deploy huge cash piles at a time when Donald Trump is adding uncertainty to just everything right now, right? And one of the things that a company can be most certain about is itself. It's got the most detail about itself. And it's good to see companies that are confident about putting money into themselves. We got this quote here: the record-setting buyback surge this quarter underlines that earnings beats and growth in the first quarter remains solid, and companies have indicated that they're not going into the bunker just yet. One of the highlights from last week's show, if you missed it, and if you did, go back and watch it because it's really great, was how I was talking about the amazing fact of GDP and the shrinking of the US economy by 0.3% in the first quarter of 2025, and what that means, both locally and more broadly across the nation, and indeed for the entire world. But it wasn't just a theoretical conversation about how this sort of stuff can happen. It was delivering real detailed value. And what we talked about, if you recall, which I'm sure you do, is that there was a huge spending spree outside of the US running up to this because the companies knew that tariffs were coming in. They knew that the de minimis kind of exemption was ending. All that stuff led to a record trade deficit. So as Trump is vocally, explicitly, publicly, transparently trying to bring down that trade deficit, as a result of that happening, people planning for it, it pushed the trade deficit up to the very record level. And that meant that the US economy shrank because GDP is worked out with a formula, which I explained in detail last week. So definitely check it out and you'll understand exactly how that all worked. One of the flip sides of this, of course, then is that there should be, in a ceteris paribus world, all things being equal, a positive mirror kind of balance to balance the scales. You know, if they bought more last month of, you know, biros, ballpoint pens, and they have all these ballpoint pens lying around, then next month they'll buy less ballpoint pens because they're like selling them, the ones that they bought in advance, so they get them cheaper. All that crack, right? So we covered that last week in good detail. That's one of the interesting things about that news. About the news, did we get to it? We did. We achieved our goal. That's super duper. Let's bring up a new goal then, and we'll set this goal for how we're going to do the end of the show. We're going to do the end of the show for we'll do sort of like, I'll take let's call it 5 requests for TA from the audience, 5 quick requests for TA, snap fire TA from the audience. If we get to this goal, I reckon we probably will. Probably. Just 5 snapfire TAs, sort of what we can discover in the space of a couple minutes. No more than a minute, sort of thing. 5 snapfire TA questions just from the audience. TA questions or charts to take a look at. Just snapfire, ready fire. So 5 audience queues / requests rapid fire. That's what we'll do if we make the goal. Will it work for me? It has. It started. Awesome. Let's check in with the audio. Not quite there yet. Should be soon. We're not quite there yet, though. They're probably just taking their seats and... Probably just taking their seats, you know, filling their cups of water. Oh, ding dong. Somebody's wanting to do that. That's cool. Awesome. So we'll work towards that goal. And we're going to end this poll as well, because I think we've got our answer on that one. It's about 60-60, a 60-40 split on the question of, do you want to be more of an investor or more of a trader? Let's get our thing back up here. So people were actually leaning towards, they wanted to be more of an investor. No, a trader. Wanted to be more of a trader than they are of an investor. All right, that's cool. So we do have a difference here. That's cool. So the desire is more like this in terms of what people want to be. So now we can see that there's a lovely little Venn diagram that we have in here. There's this chunk of people that are in that sweet spot. And well done to all of you. Oh, we can make it into a sort of happy Birdman face with a hat on, because I typically draw hats on things. There's a sort of baseball cap on the fella. That's cool. So there's a happy ground in there. If you're wearing that baseball cap of happy jelly in your salsa, correct place to be. That's pretty neat. Oh, pretty neat. So we're gonna keep an eye on how that goes over time, shall we? We'll do another poll on that in 6 months, see who it is. Maybe it's new audience members and stuff that are taking part in it. Maybe it is reflective of our core group of audience. What do you think? Audience, chat, you with me, chat? You with me? Are you with me? You're curious what I'm talking about, no doubt. No doubt you are. About my money chat. Going to be talking about money. Question is for the audience, right? Have you ever really stopped to think about what the stuff actually is? We've got an audience here which is super smart, so I actually reckon that most people in the chat box, are already aware kind of the money, history of money and that sort of all that crack. But we'll be getting into this in detail. We've got a great donation here from Lisa. Thanks so much. Thanks for another Wednesday. You are welcome, Lisa. That's cheers. We've got Jay who's wanting to take a look at TMDE, please. And we've got KXN who wants GRYP. But who knows if those will be the ones that come from the audience, guys. Thanks so much for contributing towards the goal. We'll try and make sure that we get those two in the mix, right? We'll try. But it's coming up at the end of the show. And it's a goal for taking rapid fire requests from the audience. But since we do have a minute spare, let's just bring up those two charts real quick and see what our first impressions of, and then we'll be slightly towards the goal in advance. How about that? TMDE, was it TMDE GRYP? TMDE. Relatively new. Down an awful lot from its IPO price. Over 50% down. This is forming a base, perhaps the first base in the company's history. But if, of course, we drop down below this range, is, who knows, there'll be dragons down below. Getting involved in this stock is looking at the pivot at about 186, of course, towards the top side. It'd be interesting to see if this base forms an actual bottom for it, or if it will struggle to pull out of it. The initial area of kind of head and shoulders move got fulfilled and tested here off of the drop down. So it's done some work down there to form this base, but of course, you know, the percentage moves here fairly grand.
Prepared remarks. The management team from LivePerson will conduct a question and answer session, and the conference participants will be given instructions at that time. To give everyone the opportunity to participate, please limit yourselves to one question.
Okay, so we're here. We've got the live earnings call playing.
As a reminder, today's conference call is being
introduced
recorded.
right now. This is awesome. Great to have you all here with us watching this. Makes it all so much more fun.
Mr. John Paracchio,
I'll leave the LPSN chart up in the background while this plays, and we got to cover one of those ones.
Thank you, Jamie. Joining me on today's call is John Sabino, CEO, and John Collins, CFO and COO. Please note that during today's call, we'll make forward-looking statements which are predictions, projections, and other statements about future results. These statements are based on our current expectations and assumptions as of today May 7th, 2025, and are subject to risks and uncertainties. Actual results may differ materially due to various factors, including those described in today's earnings press release and in the comments made during the conference call, as well as in any 10-Ks, 10-Qs, and other reports we file with the SEC. We assume no obligation to update any forward-looking statements. Also, during this call, we'll discuss certain non-GAAP financial measures. A reconciliation of GAAP to non-GAAP is included in today's earnings press release. Both the press release and the supplemental slides, which include highlights for the quarter, are available on the Investor Relations section of LivePerson's website, ir.liveperson.com. With that, I'll turn the call over to LivePerson CEO, John Sabino.
Thank you so much, John. Thank you all for joining us today. Let me begin by highlighting what sets LivePerson apart in today's rapidly evolving market. LivePerson has a proven track record of partnering with enterprise brands across both regulated industries, such as financial services, healthcare, telecommunications, and non-regulated industries, including retail, travel, and hospitality. As organizations accelerate their digital and AI transformations, they rely on LivePerson as a trusted partner to help guide them through their journey forward. Our strength lies in combining deep first-party expertise with a broad ecosystem of trusted partners to deliver a unified, AI-powered platform for voice and digital engagement. The LivePerson platform brings together live agents, intelligent automation, and advanced analytics seamlessly orchestrated across all channels and third-party systems. The result is consistent, contextual customer experiences that drive real business outcomes. Our value is clear to enterprises weighed down by legacy CX infrastructure, like outdated chat systems, on-prem technology, and early-generation CCaaS platforms. LivePerson provides the flexibility to adopt AI and digital capabilities within a single platform without the need for a costly rip and replace. We call this innovation without disruption. This strategy positions LivePerson as the partner of choice for enterprises addressing today's customer and workforce experience challenges. Whether they're out front with AI looking to scale their advantage or stuck behind legacy tech and internal blockers, we meet them where they are and help them move forward. By addressing the full spectrum of enterprise needs with speed, flexibility, and focus on outcomes, we are well positioned to lead in the rapidly evolving market. Before we dive deeper into our product and go-to-market updates, let me briefly discuss our high-level results for the first quarter. Revenue in the first quarter of $64.7 million was above the midpoint of our guidance range, and adjusted EBITDA of $0.2 million was above the high end of our guidance range. John Collins will provide more detail about our financials, but I want to underscore that we are continuing to deliver on our financial commitments and executing on our turnaround. Now let me move to our product update. We structure our product strategy around three core dimensions, each essential to delivering greater value for our customers and reinforcing LivePerson's position as a market leader in enterprise digital engagement and conversational AI. These dimensions are differentiation, high-value innovation, and foundational capabilities. Our differentiation comes from a focus on agentic orchestration with leadership in advanced AI tooling and unified analytics and generative insights. A great example of this is a health insurance provider that wanted to improve the accuracy of their inquiry routing while reducing maintenance labor. By implementing our AI agent capabilities, they boosted intent match rates from 70% to 90% in just 2 weeks and cut human-agent conversation times by 30%. The results were more efficient operations, enhanced customer experiences, and substantial cost savings. Our platform integrates generative AI with customer data, business logic, and third-party agentic bots and tools to power personalized, context-aware interactions at scale. This keeps LivePerson at the center of the customer experience, orchestrating engagements even as the ecosystem around us continues to shift. It is our core driver of differentiation and competitive advantage, establishing LivePerson as a system of action and intelligence for enterprises. This is not just about automation. It's about delivering real-time, goal-driven experiences that span digital channels, voice, and back-end systems. Much of this is what we're doing now, and our roadmap is designed to accelerate it, keeping pace with new technologies and evolution of foundational models. Second, We're delivering on our high value add capabilities that extend our leadership in generative AI. This includes our AI Builder and AI Blueprints, next-gen tools for building and managing and analyzing AI-driven conversations, along with core generative AI agents for key use cases like FAQs, data collection, and routing. We're also continuing to expand our industry-leading offerings with unified analytics for real-time AI-powered insights and AI assistants and agent co-pilots that significantly improve agent productivity. These are capabilities that are already driving measurable impact. In Q1, we saw a 14% increase in the number of customers using our generative AI tools and a 25% sequential increase in conversations powered by generative AI. These are not abstract metrics. They represent real value delivered to real customers. For example, a UK-based telecom company and a leading solar company are now using generative AI in 80% and 90% respectively of their customer conversations. In addition, a global luxury fashion company and one of the world's largest banks renewed and expanded their partnership with us, citing our leadership in generative AI and enterprise-grade guardrails. The final dimension of our product strategy is about maintaining our foundations with evolving consumer expectations. We continue to deliver the essential contact center and communication capabilities our customers depend on. This foundation is critical to running day-to-day operations and delivering a consistent, reliable customer experience. It includes a broad range of connectivity across digital, social, voice, and email channels. We also offer standardized APIs and SDKs that make integration easier for enterprises, partners, and developers. For example, our previously discussed integration with Avaya allows brands to unify digital and voice experiences without disrupting existing IT environments. This quarter, we're launching the same integration with Amazon Connect and building new connectors that make it easy to bring virtually any voice system into our AI environment. We're also preparing to launch and innovate an email solution, recognizing the continued importance of this channel and positioning ourselves ahead of the AI revolution within it. In addition, we've partnered with a leading global bank to reimagine in-app mobile experiences using our SDK, and it's already powering millions of customer interactions every day. These are just a few examples of how our foundational innovations continue to drive strategic value for our enterprise customers. Executing on our product strategy and evolving it over time will ensure that we continue to support enterprises at scale with AI-powered orchestration across all touchpoints. It will help accelerate adoption of our product and strengthen our partnerships with our enterprise customers. I am confident that this strategy, closely aligned with our customers' priorities, will position LivePerson as a partner of choice for brands seeking to innovate and lead in an AI-driven customer engagement, driving meaningful growth in both new business and retention for LivePerson. Next, let's discuss our go-to-market. Partnerships continue to be part of our go-to-market strategy. We're seeing growing momentum driven by our flexible architecture, LLM-agnostic approach, and strong track record of successful implementations. As previously discussed, we are excited to launch our Amazon Connect integration in the second quarter, and we're already seeing early customer interest. We're also on track to hit our goal of 35% partner attach for the year, which reflects the growing strength of our partner ecosystem. Ultimately, these partnerships will allow us to reach more customers, accelerate innovation, and deliver greater value at scale. Regarding pricing, we continue to see momentum in our simplified, customer-centric bronze, silver, and gold packaging and pricing strategy. IBM recognized the value in our gold package, which gives them access to our full generative AI suite and the flexibility to bring IBM watsonx technology into our platform. The combination led to successful renewal and an expanded partnership. We're continuing to actively explore refinements to our pricing and packaging to deliver greater value to our enterprise customers. A key area of focus is creating incentives for brands and partners to bring their third-party bots to our platform. Today, this represents approximately 20% of total bot usage, and by aligning pricing closer to the investments customers are already making in their own tech stacks, we can help them unlock the full potential of our analytics and agentic orchestration capabilities, while also driving meaningful cost savings. Finally, let me touch on bookings for the quarter. While retention continues to improve and exceed our expectations in the quarter, Several large deals initially expected to close in Q1 are now expected to close in Q2. The shift was primarily driven by extended enterprise buying cycles. However, we're already seeing positive momentum on these deals in the second quarter, along with a strong growing pipeline. We remain confident in our expectation for positive net new ARR in the second half of this year. In closing, we delivered on our Q1 financial guidance and remain on track to achieve our full-year targets. As expected, we faced headwinds in Q1 related to the prior renewal cycle, but we are now seeing more favorable renewable trends and expect that to continue. In addition, we're seeing new pipeline momentum building through our partner ecosystem and our direct sales efforts. Our priorities remain unchanged and consistent with what we outlined in our Q4 call. First, driving commercial performance through growth in bookings and improved retention. Second, maintaining disciplined cost control while strengthening our capital structure. And third, accelerating innovation across our product. I remain confident in our trajectory, and I firmly believe in the future performance of the company. Now let me hand the call over to John Collins, our COO and CFO. John?
Thanks, John. I'll begin with a brief update on customer wins, followed by a discussion of our financial performance and guidance. In terms of deals and significant customer wins, we signed a total of 50 deals in the first quarter, including 5 new logos and 45 expansions and renewals, translating to a quarter-over-quarter increase of 25%. As John alluded to, we observed extended enterprise buying cycles in the first quarter that caused several large deals to shift into the second quarter. While macroeconomic factors likely played a role, the extent of which is unclear to us at this time, we also observed that increasing demand for AI added new approval gates for risk and compliance. We view the latter as a positive development for LivePerson, considering our focus on AI guardrails and track record in highly regulated industries. More importantly, we believe this increasing demand reflects the demonstrable return on investment from our platform, which is driving expansion in deal sizes as we progress through the sales cycle. Broadly, the first quarter, we observed a continuation of commercial themes from recent quarters. Again, increasing demand for AI agents and AI orchestration, continuing traction within highly regulated industries, including healthcare, financial services, and telecommunications, which collectively represented 70% of bookings in the first quarter, and building momentum with partners who leverage us as a trusted AI-agnostic orchestration platform for the enterprise. Consistent with these themes, significant renewals and expansions included one of the world's largest banks, a global financial technology platform, 2 of the largest telecommunications companies in Asia Pacific, one of the world's largest health insurance providers, and, as John said, IBM. I'll emphasize that all of these deals leverage our suite of generative AI capabilities. Significant new logo wins included one of Canada's largest retailers and a digital entertainment company focused on commerce use cases. As for our first quarter financial results, total revenue was $64.7 million, or just above the midpoint of our guidance range. The improvement above the midpoint was primarily driven by slightly better than expected retention in the quarter. Despite the sequential revenue step down, adjusted EBITDA for the first quarter was just positive at $0.2 million and above the high end of our guidance range, driven primarily by continued optimization of our cost structure. Revenue from hosted services was $55.1 million, down 23% year over year. Recurring revenue was $60.4 million, or 93% of total revenue, and down 22% year over year. Further segmenting revenue, professional services revenue was $9.6 million, down 30% year over year. From a geographic perspective, U.S. revenue was $40 million, and international revenue was $24.7 million, or 62% and 38% of total revenue, respectively. Average revenue per customer was $640,000, up 2% year over year, driven in part by expansions with our largest customers and in part by customer retention. RPO declined to $221 million, consistent with the same factors driving declines in revenue. Net revenue retention was 80% in the first quarter, down from 82% in the fourth quarter. As a reminder, net revenue retention is a function of in-period revenue, so this metric will generally continue to decline until revenue begins to grow again, which we expect by the end of the year. By contrast, we expect renewal rates, measured in terms of ARR, to improve in the second quarter and beyond. Finally, in terms of cash, we ended the first quarter with $176 million of cash on the balance sheet, inclusive of the proceeds from the transaction with Lynrock Lake last year. Turning to full-year revenue guidance, we are reaffirming our guidance range of $240 million to $255 million, approximately 93% of which we expect to be recurring. As previously discussed, we continue to expect sequential declines in revenue through most of the year before reaching an inflection point by the end of the year. In terms of net new ARR, we continue to expect this leading indicator of future growth to turn positive in the second half of the year. For the second quarter, we expect revenue to range from $57 million to $60 million, representing a sequential decline of approximately $6 million at the midpoint. Consistent with expectations we previously set on our fourth quarter call, the quarter-over-quarter decline is primarily driven by first quarter attrition events that were anticipated and tied to the prior renewal cycle. Finally, and consistent with the full-year revenue mix, we expect recurring revenue to make up approximately 93% of total revenue in the second quarter. In terms of adjusted EBITDA, we are reaffirming our full-year guidance range of a loss of $14 million to break even. As previously discussed on our fourth quarter call, we do not expect positive free cash flow in 2025, though we continue to improve the cost structure while preserving the investments necessary for a return to growth. Finally, we expect adjusted EBITDA in the second quarter to range from a loss of $4 million to a loss of $2 million. Before moving to questions, I'll briefly summarize a few key points. We continue to see increasing demand for AI agents and orchestration, including expanding deal sizes as we progress through the sales cycle, which we believe reflects the demonstrable return on investment from our platform. While this AI demand has added new approval gates for risk and compliance, which shifted some deals into the second quarter, we believe this development is positive for LivePerson, considering our track record as a trusted partner in regulated industries and our focus on AI guardrails for the enterprise. Despite the shift in timing, we continue to expect positive net new ARR in the second half of the year, driven by sequentially increasing renewal rates, expansions, and new logos. And with that, operator, we can move to Q&A.
Ladies and gentlemen, at this time, we'll begin the question and answer session. To ask a question, you may press star and then one using a touch-tone telephone. To withdraw your questions, you may press star and two. If you are using a speakerphone, we do ask that you please pick up the handset prior to pressing the keys to ensure the best sound quality. Once again, that is star and then one to join the question queue. We'll pause momentarily to assemble the roster. Our first question today comes from Ryan McDonald from Needham & Company. Please go ahead with your question.
Thanks for taking my questions. Maybe first on the sales cycle elongation, from some of the deals slipping from Q1 to Q2. Obviously, it sounds like just adding AI in is adding more complexity, more approvals, completely understandable there. But I guess, can you talk about the progress you're seeing maybe on those slipped Q1 deals in Q2 thus far? And any signs of, let's call it, the uncertain macro environment starting to play a role that could lead to potentially additional deal slippage into the back half of the year? Thanks.
I'll start here, John.
Sure.
Broadly, we think that the macro environment certainly is playing a role generally in the elongation of sales cycles. However, the extent to which that's impacting us in the first quarter is not clear at this time. As for progress on these deals in the second quarter, we are on track broadly to close them within the quarter. They did not shift out ambiguously into the future, but we have specific close plans tied to the second quarter for these deals. And as we shared in the prepared remarks, these deals have actually also expanded in size in the second quarter relative to the first.
Right. Just to build on that and highlight that, that's the key point here, that the macro situation is uncertain for many companies, and I'm sure it's playing to some degree in the decision cycle with customers. But what we're not seeing right now is deals shrinking or customers backing away. It's, as John has explained, they're looking for more enhanced capabilities around AI, bringing additional approval gates, which we do not necessarily see as a challenge. We're very used to operating in that environment, and most of these deals have actually gotten larger in size.
That's great to hear. Maybe as a follow-up, wanted to ask about the impending launch here of the integration with Amazon Connect in the second quarter. Obviously, Amazon's had some really impressive market share gains. I think there might be number 2 worldwide now in CCaaS. Can you just talk about sort of the level of enthusiasm you have for the launch of that? Maybe dive a little deeper on some of the early interest you're seeing, and how material and instrumental do you think this new partnership can be for your go-to-market motion and sort of the return to growth strategy here? Thanks.
Yeah. John, I'll start with this one. So we do see early interest in this integration, and I think it lines up primarily with what we outlined as a point of differentiation for us. It allows customers to engage in their tech stack and not have to do significant rip and replace and still get all the capabilities that we bring. So we see this as a net positive, and we do believe it can have a larger positive impact with both our partner network and customer base as we start to show the advantages of working with us in conjunction with Amazon Connect. So with the gains that they've had in the market, it has not been a point of contention or competition per se with us. It's actually increasing the number of customers and SIs that we can work with in the future as potential customers. It's very similar to the Avaya strategy that we have. And lastly, the strategy of the company when it comes to voice and other capabilities, again, is to work with as many platforms as possible so that customers can move forward without lengthy, large technical projects that have a lot of risk. And that's what we're finding customers see value in. So we have some pretty decent sized customers that are interested. We have partners that are excited about it because I think it's going to give them an opportunity to talk to customers about new projects and digital transformation. And we see this as a net positive that aligns very tightly with our current strategy.
Thanks for the color. I'll hop back in the queue.
Thank you.
Once again, if you would like to ask a question, please press star and then 1. To withdraw your questions, you may press star and 2. Our next question comes from Mike Lattimore from Northland Capital Markets. Please go ahead with your question.
All right, great. Thanks. I think you said you expected the renewal rate to improve in the second quarter. Can you just talk a little bit about the trend in the renewal rate over the last few quarters? And, will this be a sort of material change relative to the trend that you've had previously?
I'll start here, John.
Go ahead, Listen. Yep.
Just from a numbers perspective. In terms of trends, Mike, the second quarter reflects a significant improvement relative to the past several quarters. We're approaching, once again, in our forecast, industry norms for renewal rates in Q2 and beyond. Not best in class yet, but industry norms. So that's a significant improvement from, again, the last 3 to 4 quarters on an average basis.
And then, JC, I'll add to that. You've heard me reference renewal cycles, in other words, contracts and average deal length. We are now just moving through that. So Q1 is what we believe the last real remaining quarter of what we saw, from over a year and a half ago, 18 months ago. So we're now starting to move through that, and we feel confident that the renewal rates that we're seeing moving forward from now are a result of the changes that we've made in our customer success motion, the effort by Kevin Meeks to really help focus the customer on adoption and ultimately driving more value, use cases, and consumption with our customers. So Q2 should start to reflect those efforts that we've been working on over the past 3 or 4 quarters.
Great. Super. And then as you just think about the pipeline, and I guess even bookings activity, is there a noticeable difference in kind of U.S. versus international patterns here?
I'll
Do you want me to
start
take that?
here, John? Sure. Mike, at this time, I would say not a noticeable difference that we're observing, but that's also, a function of the significant changes we've made to our commercial motion, including changes overseas. And so while our APAC region has continued strongly throughout 2024, and the forecast is similar for 25. In EMEA, we've been in a bit of a rebuild, and the positive changes that we've made should take effect going forward. So the observations we have to say that there are significant differences are not really in the system yet. So I would say, again, not significant differences at this moment in time.
Yeah. Very specifically, it's not regionally based improvement. It's improvement across the board. And again, I think this is some of the focus that we've put in terms of how we've deployed our sales teams, our comp structure, how we've aligned our pricing and packaging to make it easier for customers to actually assess and look at our product and see value. So the improvement in the pipeline is decent it's significant over last year, I should say, and it does position us for success in meeting our commitments for this year.
And I guess just to follow up on that comment you just made, so any quantification of the improvement in the pipeline?
I don't think we do not typically report on the pipeline. I'll just let you know that it's improved over last year, and we're happy with where it's at.
Yeah, Mike, what I would say is just quarterly, we've been improving total pipe that we're entering the quarter with, and that we're generally building throughout the quarter. So if we look at this on a trended basis, it would be safe for you to assume that we're broadly building more pipe each quarter of 25 than we did in 24.
Yeah. Healthy and improving. That's probably the best way to think about it.
All right. Great. Thanks very much.
And ladies and gentlemen, with that, we'll be concluding today's question and answer session, as well as today's conference call. We do thank you for joining us. You may now disconnect your lines.
And that was the call. In the chat box, finish the sentence. LPSN is building. See what you think would be the right word to put at the end of that sentence. This earnings call for LPSN, what did you think? What did you think compared to the last earnings call? I feel like they sounded and felt more confident. Is it just something in the air, something in the weather, perhaps? What is it that makes me think they sound a little bit more confident? Am I the crazy one? Maybe it's just me that's more confident. Let me know what you think. We've heard TradeSpotting's answer and ARC. That's a good one. Carlos is saying that they're building value. That's cool. Building green candles. That's building an empire, building momentum. Some good answers in the chat, folks. Good stuff. We had some funny answers for the last one with the growing to be expected, I suppose. They're building ARR, says Minner. And we heard that there with the average recurring revenue. Big part of the phone call was talking, of course, about recurring revenue. Here it is as a percentage of total on this chart. And you can see that the percentage is high, and it's maintaining a high recurring revenue. So as these numbers were declining, the number of the recurring revenue, generally speaking, has been high, 93%. There was a 94% quarter last time around, and then it's back to 93% again, and that's what they expect, high recurring revenue, which is really great, because when we look at the size of these two bars here, I think it's quite suggestive, really, of where they will be in the future. Very shortly, this number that's dropping will cease dropping. So what was one of the big things that we spoke about last time around, right? What was one of the big things we spoke about last time? And there was a lot of big things. The figure here was very close to the previous quarter's figure. And they'd said that they expected to see a continuation of the trend of dropping down in terms of their revenue by around about 6 million. It was 85, then 79, then this 74 became 73, instead of being perhaps 70 or 69. But we did know that the timings of this, because of the deals and the way the money was coming in at certain times, that the overall average would be fairly similar, and the result would be that it would drop down to around about 64 or so. We talked about this and we anticipated how it could go, and maybe it's come in slightly better. I think it's come in slightly better than the predictions that I had made for it based off of the kind of details we were seeing. They're looking at the figure possibly going as low as 57 million, kind of being upfront and transparent about it, and then increasing average revenue, increasing average recurring revenue throughout with a net positive ARR by H2 of 2025, and they're still working towards that. And we're seeing that there's been growth in the pipeline. There's been growth in the deal value that they're signing. And is there some tentative confidence about a small amount of growth, so to speak, in terms of their ability to retain customers? I'm feeling that that confidence about their ability to retain their confidence is growing. You would expect so, because we have a planned kind of end to the churn period, but that felt like it was growing in confidence too. One of the highlights perhaps from the call was the IBM piece. Now, we love IBM, but their contract with them was coming to an end, and instead they've renewed and improved the deal. It was actually a bigger deal by the sounds of things. Correct me in the chat if I'm wrong about that. I want to get these details right as I read them out to people and talk about them. So do correct me if I'm wrong about that. See that Jay Hunter says it's a much better call than the previous one. I think he thinks I hit the nail on the head there with the word confidence. I think that's good. That's good. We don't like to discuss the pipeline, but it's growing in the chat there as well. The pipeline is growing. A little nod to retail, in my opinion, in the tone he thanked and signed off with. The you felt quite specific. I can agree with that. I can agree with that as well. That's a comment from the chat box there with guitar outside. I definitely can see that. We've got, I was quite pleased with that call. And I would agree with Rocky that the tone of the call was a confident one. So we're seeing some more of that in the chat box. Merrick put in a couple of donations, so did Minner, to bring us across the line for taking some chat from kind of crack from the chat there, and we're going to be doing that. We'll put that emphasis into our effort towards taking a look at some EVGO chart in the show. Merrick, do remind me. And we have also got our goal for doing the money chat. Did that not work though? I think maybe something went wrong there. The Bitcoin ETF is making your portfolio happier, says J-Dog. That's something to take a look at as well in today's show. If people would like to do reach out and talk about these things. We're seeing Bitcoin in, this is a 1 minute chart here, so that's quite a flattering picture there. Here's the daily time frame. This has been an update that I've put in the Discord a few times recently, just talking about this line. And it's doing okay, 97,000 currently on the Bitcoin price, which is a positive Bitcoin price. Here, the IBM chat I think was quite positive. I did like hearing it, and the chat about what they're using it for was quite interesting as well, and how the full Gen AI suite is being leveraged here, empowering them with their operational efficiency increases, which is really great to hear because that's now a core product for LivePerson, LPSN. But we heard as well that it isn't really just about making good chatbots. That really was what the companies started up doing a long time ago, before the vast majority of anybody had ever even heard that chat boxes could exist on websites. And it's advanced quite a bit. It's advanced even beyond just servicing the needs of a customer service department. It's now actually able to get into the business and bring through efficiencies quite quickly. And it doesn't necessarily involve a long drawn out development technical process. Part of the chat from him, which I thought was quite intriguing because it's kind of like a foot in the door technique. Another part of the chat that I found intriguing, and by the way, if anybody wants to put in a comment about what they thought was intriguing, I'll read a couple of them out in just a second here for everybody on the live show. But one of the other things I thought was intriguing was how they talked about the way that people are approaching AI now with such vigor that they're able to talk to their customers about digital transformation, which sounds quite positive and good. It's been a while since I've heard about companies really pushing the idea of digital transformation, and it's be good to get back into that. The market overall had headwinds for them, and we did see that massive amount of buybacks that are coming from companies. And at a time when there's uncertainty and threats, there is an element out there of, right, let's sell this harder because we can bring through efficiencies, really help at times, and increase certainty. So I did find it really interesting. They're talking about being able to deploy things fairly rapidly to get a foot in the door with some companies. And I felt it was interesting the way that Salesforce, etc., are just creating more future customers for LivePerson. And that speaks to my sense of the tone of confidence. So that's the thing that I would share in terms of like my first major piece about this. And here's an opportunity for you to get your name up on screen in the live chat box with what you think about the call here. So I've just opened up a fresh one to make it nice and big on screen. Not seeing a shakeout from earnings or much volatility. No, not seeing an awful lot of that. Actually, you're right. So there's a couple of bigger comments up here as well. JC Ravioli points out that John Collins says that they are confident average recurring revenue would improve materially compared to prior quarters, but in guidance it's still forecasted at 93%. Does this mean they are under promising so that they can over deliver? So that's another part of the confidence, and this is a comment that now a few earnings calls in, we've done them for the last year, or more now, and we've been talking about this from the start as being a big part of the way that Sabino and JC are approaching things, with under promising and over delivering. I would love it if that was the case, Ravioli. One of the things, I'll bring the chat box back on screen in just a sec, folks. One of the things was that we were what we're seeing here from Ravioli is he's talking about this particular figure just down here and the other places that it's mentioned in terms of guidance. And I think that the crux on this comes down to a two-part answer for you. One is they've got a pretty firm idea about where they'll be come the end of the next quarter. However, there is the chance of it being at around about 60 million. And if you recall, as I was speaking in when this picture was on screen here, and I was saying that we had anticipated this drop down, and it could have been slightly worse than it was. There's a slight margin, slight bit of breathing room, which isn't really reflected overall in the bottom line, because you're still you're still looking at this drop down. It's still there. The investors are seeing these numbers, and obviously that's the hard reality of it. But it was slightly better perhaps than it might have been. And then this is perhaps slightly more positive than it could be. Nevertheless, to achieve revenue guidance figure of a full year of 240 plus, having gone in with one of the quarters being 57, does mean that you would need to see good, strong growth in the second half of the year in order to achieve that number, you know, more or less. If you think about this at a basic, in the basic sense, and I don't need to do this for anybody who's worried, but this is the math, 57 times 4 is 228. So if it was 57 in Q3 and Q4, then they would be 20 million or 12 million short of the lower end of the target. So it has to grow, and there's kind of a gray area to be able to say, how much is it going to grow, how much is it going to decline, and they are in a sense, as you say, they're giving themselves the opportunity to under promise and over deliver. I don't think that they're necessarily going to be able to over deliver necessarily, but they're giving themselves the opportunity to do that, and that's what I like to see from my businesses, yo. So we're seeing chat around the topic there. That's quite cool. If anything, like Traceborn has previously mentioned, the uncertainty economy could provide more growth for LPSN as companies are scrambling to save money. Great comment to add in there, Jay Hunter. Let's take a look and see if there's anything else in here which I should point out. Found their comment on the deals from Q1 that were delayed into Q2 ended up being larger deals. So they were delayed for good reason. Nice to point that one out. Mr. Who is it? Mushroom Minis. Cool. Right. Carlos says he liked the questions. Let's do our sort of chat box duty at this point and get a quick poll on the go with everybody here, because it's the right thing to do, isn't it? Start a poll, and we'll just call it happy with the call. Yes, no, add option. Just for the IDKs out there. Let's do this. Get your poll, get your answers in the poll thing. And we'll bring the results up on screen soon. This is EVGO chart, 24-hour chart, couple of decent days, gap down to open here, resulting in the push up during the actual 24 hours. However, if we look at this from a perspective of the day, this is the beauty of different time zones in the world. You can see, of course, we had this negative day. Right, okay. It's both of these are floating around at the top end of the target from before. So Merrick was asking the question of, could he get in here at a decent retracement? And the numbers that you said at the time have escaped my mind, Merrick, and they'll be away from the chat box at this point. I'll be able to scroll up and see them. But we can kind of think about, would this area where there was the breakout zone be tested again? And that's one I think that is worth bearing in mind. So we've got that in more or less the same place as what it was before, because that was actually where the gap ended up. So I'm going to just leave that on the chart. I'm going to also put in a wee box just here and say that there's this gap which might need to be tested. So we've got that zone down there, which is around about the 297 area that you might have been talking about aiming for. That presents obviously a bit of a risk. The risk being, as we know from Ed Sequoia, that if you were to enter into this zone again, this kind of overall range, and that's a bit generous, get into this range again here, then there's a solid chance that you could see it pulling down to the midpoint. So it would be, prudent to look towards perhaps where we're coming back down to testing this area again, which would be like a retest of the diagonal breakout zone. That's where the volatility could reside if we come back down to test this. But that doesn't mean that it's not possible to trade within that area if we do see a retest down here. Nevertheless, it's pushed up so much and it has put in highs that you could kind of make the case, and I'll make it just real quick here, that this remains above a valid sort of retracement pullback area. While the prices are above 360, you can look to the continuation if the momentum is truly there. A couple of things that have inspired a move has been earnings, and I would look into the detail of this earnings just to see if there's something to really pull out from them, which is a surprise. Now, one of the things we've talked about in the earnings call we just listened to, I've mentioned it a couple of times, has been this chart here in terms of recurring revenue and non-recurring revenue. And when you're looking at a company that's had a bump up following on positive earnings, it's good to get the story and to find out exactly what this was, because there was a surprise of 3.8 million, 75 versus 71 was a surprise in the earnings, and it would be interesting to know if that's likely to be recurring and if it could help shift the needle on the actual profit the company is making. And I would really kind of consider that just to see if there's detail that should be picked up on. Now, if we look back at their previous earnings results and that, we can see that they had lost about 11 cents. Previous to that, lost about 11 cents. Previous to that, lost about 10 cents. And coming on to this one, the expectation was that they were hoping for them to be about 8, which is quite generous. Quite like there was a growth factor was there, some anticipation. I'd like to get the detail on why they were anticipating them to outperform their previous earnings and how consequential it is to have got it wrong by a penny in a world where actually it was 0.086 and it's just the third decimal place isn't really there. Were they rounding down, rounding up? Is it like a rounding error? And just to get a little bit more detail on that, is the momentum going to stick with us? That's a big question for us. The daily chart hasn't got answers on the momentum for us quite yet. The pullback we've seen has been natural. Managing risk earlier on the long side trades at 360 is probably prudent. When Merrick's very, very correct to point out that we could come back down to retest this zone where was the breakout, and managing risk there does leave you to the exposure perhaps of a volatile move that comes to retest and come back up, and you might get caught in whip. But it's worth pointing out that if you were to be managing risk fairly tightly on trades there, that if this retraced as deep as that and then didn't bounce, then catching a knife as it enters into a prior range is a dangerous behavior for traders who know that when in a situation like this, it could come down to around about a midway point, which happens to be roughly around about where that line is. Kind of looking at that and seeing how does it line up in the past, we can see that this was an area, I'd say maybe all the way down to 250 is a big kind of pivot in the market for this one recently. The story of this possibly evolving into, and I'll try and cut this short to not sooner now than to not end up frustrating anyone who's not in trading this stock and isn't learning from this technical analysis, but you should be, because that's very, very useful information for any chart. This I don't really particularly like the aspect of this as being like a pattern to trade necessarily whenever we've got such clear definition given to us by the sort of structure around it, and I would hesitate to do so. But in terms of further and deeper analysis, rather than giving a broader picture, as Merrick already identified, he's been trading on the larger time frames, and probably others have too. Just to kind of put this into a bit of detail for us, if we do see the prices dropping down below 360, here's just another look at that area. That is what you'd be managing your risk against. This here area of clear threat if that price was broken, and this represents therefore the dip in this overall upward thread of trade here. If we're going to get something that works out like this, inside, that's so messy at this point. If we're going to get something here for us, which has got a discernible pattern on it on some smaller time frame, it could be coming up along these lines. And this represents the pivot for us. And I think that that makes it fairly clear to everybody who's decent at technical analysis in terms of how I'd be thinking about this just now. And I'm sure that's helpful to Merrick, probably complements the things that you've been thinking yourself. But what was it that I wanted to talk about with people in today's show? Because this was a big part of the preparation for today's show. Today. And the answer to that is money. Thank you, Rocky Aircrop. Your input helps me greatly, adds to my edge, and helps me understand where I can expand my vision to improve my trading. That is great. That's great. Weekly momentum indicators worth a look on EVGO. Macro bear trend reversal potential. Yeah, well, the enthusiasm for selling this thing was kind of over here at its peak was larger, and the prices that have moved up since haven't really wiped out those bear side traders and did come back into that zone. It is interesting to see that the momentum has carried the prices up towards this area, right, which is where we saw the largest region of kind of selling, and where the momentum on this was like at the most can I just show this instead of it being hit? There we go. Where so this area here where we saw the largest amount of selling in here hasn't really been flipped yet in terms of price. So starting from kind of this zone through to here on the chart where we had the momentum showing the big rise up in the RSI, trying to kind of withhold that, you know, become bullish, was sold into by traders at that point. And whenever the prices broke down below this zone here, then of course that's whenever we lost the momentum. And at this point then, where we've come up so far, if we just extend this back over, puts the prices, this is the 15-minute time frame, having come up and tested into that zone and found the liquidity exists there from those people who are determined to see that case for them turned out to be a profit maker. But you know, if those get eaten through, then there's certainly another trade to be had. And if you're looking at the weekly time frame and asking about turnarounds, then this is the zone to be aware of, because perhaps, you know, buying into movements that take the prices beyond the prior resistance, and this is clearly where the psychological zone for the bears would be at, given the way that function around that zone, then of course you've got big targets up above that leave plenty of meat on the bone if you were to try and trade for a move above those zones. So there is definitely a worth looking at that, and I hope that adds to your thinking on things. That's pretty detailed though for people who are really new to technical analysis, and I'll just take this away again here because I don't like to over egg the pound cake when it comes to information that we're giving people. Okay, so that was just cool. That was just cool to do that. I think that was a nice payoff for that little goal that we had, and overall, right? And we are and we're delivering, you know, for people here in today's show. So that's pretty good. We can do more technical analysis soon, but I did have the goal here today of delivering some information about money. See here, by the way, folks chatting in the world of Discord, which is pretty cool. But I have to move you off my screen because you're distracting me with the just click in front of you. There we go. Now I want to see the movement. Cool. Okay, so what we wanted to talk about here today was money. And this, of course, is the US money supply chart. stick with me, folks, by the way. This is the part of the show where I try to give people a nice, solid takeaway that'll expand their mind, education, and all the rest of it. And let's dive into it. So, all right, everyone, and it's fantastic to see you here. We handle it, we chase it, we worry about it every single day. What is it? It's money. It wasn't a very hard riddle, that one. You know what it is, but have you ever really stopped to think about what this stuff actually is? This is the US money supply chart. This chart you might be familiar with, showing the increase in money since all the way back here in 1959. But you know that money goes back older than 1959, and that there's a whole history to money, and it has various different meanings to people now compared to the past in different parts of the world. And the question really is, for everyone, money. What is it? Let's expand your mindset just a little bit on this. This question, right? It is a good question. Beyond the surface, what gives money its power, right? What is money's real mojo? We know what a dollar bill looks like, but what does it actually mean? And that's our promise tonight, this evening. We're going to unpack that question. And when we come back to it at the end, you should have a different answer or a better answer to what you would answer if you answered it right now. Unless you're an expert pro, in which case that's cool. And I want to see your contributions to this chat. Stick your answer into what is money just now, but we'll explore a couple of different ideas and journey through the story from the ancient times to the digital frontier and figure out what's real, what's hype, and what truly matters. This isn't just finance, it's the fundamental human invention. Because we know that we invented money. It's completely made up. Money isn't like something that you just dig out of the ground. It's currently a made up thing, but it wasn't always that way. In fact, you can go back and you might be thinking, oh, money used to be gold. It used to be gold, didn't it? But you go back further and you'd be like, oh, money used to be salt, which might surprise some people that salt was worth more than gold at one point. The Teutonic Knights and Knight Templar and all that crack, Knight Templar, they started up with salt as money. But it goes back further than that as well. Picture a world where there is no money in any way that you recognize it today. What was there then? And in a sense, there was always a form of money. It wasn't really money, it was bartering. And that was the first part of what money is or became. It was barter. And barter kind of works in a particular way. Here's an example. I'll give you 3 chickens if you give me 1 axe. It's a pretty simple system, isn't it? But it's got a major flaw. It's messy. What if the axe dude doesn't want to sell it for chickens? Okay, what if he doesn't want to sell it for the type of chickens that you've got? What if your chicken's eggs are no good? What if the chickens aren't worth a whole axe? Like 3 chickens aren't worth an axe? What if it takes 4.6237 chickens to buy an axe? And this actually has a name, this concept. It's a classic concept. It's called the double coincidence of once. It's the problem, and what that means, the double coincidence of once, is that if I'm a guy that happens to have 3 chickens and I need an axe, and you're a guy that happens to have an axe, then there's a double coincidence that we both want, you're a guy that happens to have an axe who wants 3 chickens. Then there's the double coincidence of once, which is the basic kind of fundamental principle of barter. However, it's incredibly inefficient as a system, trying to find people who happen to want the thing that you have to offer for the exact thing that you're looking to get. Is really hard to divide, and there's no way of kind of like scaling that system out, because you might have 10 axes but not want 30 chickens or whatever. So humanity has needed a better tool than that from the very beginning, and we always needed a better tool. We always knew that we needed a better tool, so we started agreeing to certain things having shared value. And people will look to really historical examples and say that the solution became to find shiny stuff. That's perhaps a bit of a is it maybe a bit unfair to say just shiny stuff, but it really was just shiny stuff. And as humans, even though we're super advanced and have the internet and iPhones in our pockets and all that, we still really love shiny stuff. And we could all recognize that. So we shared that among us all, which allowed to the idea of a shared value system, which led to gold and silver. But there was, you could say, a bit of a stage in between, I think, a characteristic perhaps of the Stone Age. And we saw this as well in like Australian Aboriginals, whenever white British settlers went over there, and that, where you actually began a system of axe heads and axe handles. Started to kind of become a form of cash, and the early Adam Smith, sort of would have been able to have looked at the system that they had in Aboriginal Australia and said that there was components of the Wealth of Nations happening right there, as one particular tribe of Aboriginals became very specialized in making axe heads, and another became very specialized in making axe handles, and they would go and they would meet and they would trade between each other for the swapping the handles for heads at certain values that had the barter. But then outside of that, everybody else who needed anything would be able to trade them for a handle or an axe head, knowing the kind of relative value that they had. So if you had a lot of axe heads in your pocket, it became somewhat transportable to the point that whole communities were able to trade and using these things. However, that's not really the way that most things widely went forward as a system, because that doesn't really work. You eventually get to a point of having some sort of thing where if there's an ubiquitous shared value aspect. And gold, shells, shiny metals, they're durable, they're portable, they're divisible, and that's a key point as well. That's where money started to take its early roots from. And yeah, shells, that's right, shells, that's absolutely a part of it. And then from direct exchange, to symbolic worth. And the problem had a solution, which is a better result than simply trading things. But have you ever looked in the cash? You ever looked at that cash in your wallet and wondered actually what makes it valuable? Is it gold in a vault somewhere? For most of us, that ship sailed decades ago. If it's not gold, then what is actually backing up the money? The idea that it was backed by gold is old school. It's not that at all anymore. What it is backing up in the modern world is trust, which is a completely different commodity to gold at all. If you could say that the answer for what backs up money nowadays is not really even about value in an object at all, and is far more about us and our relationships with money and each other. First, there was the leap, paper notes that represented gold. That was when we started to trust a promise. Now, gold still backed up money at that point in time. If you went into a US bank, you'd be able to exchange it at a rate of around $35 to an ounce, and that was going for hundreds of years, really. Sort of experts out there will start saying, no, that was agreed at a certain time that was different to hundreds of years thing. Yes, I know. The exchange rate for gold has changed over time. Indeed, as well, it was silver at certain points in time. The gold standard in the UK was not the case whenever Churchill took over as the Treasury, the Chancellor of the Exchequer in the UK, so Treasury Secretary sort of thing in the US. It's been the sort of 15 years before World War II started, and he put us onto the gold standard, and it wrecked the economy at the time. I think we were it would have maybe worked better had we just had a silver standard at that point. Anyway, that's just a bit of history. The big leap in terms of moving, the first major step away from walking around with gold in your pocket became walking around with bits of paper in your pocket that represented the gold. And where did that all start? And you'll be happy to know that that did start in, of course, the Bank of Scotland. That's right, just up the road, just around the corner, where we were the first places in the modern-ish world to actually start offering retail customers storage and promises of that money in exchange for a note, which made it transferable, which made the money in your bank account transferable between other people, which made it into a promise and not the actual thing itself, which meant you trusted in the person giving you the note, and you trusted in the bank to actually have that money. Then there became right, so that was the major leap. That was the first major leap. And then we moved on to how we kind of see things nowadays, which is fiat money. And why is fiat money valuable? It's valuable because we say so, which seems like it seems like too much of an abstraction. It's not too much of an abstraction, but it has completely moved away from the idea that your notes represent some bit of gold saved in a safety deposit somewhere that transfers between people when they give you a note. It gives you access to that gold in a safety deposit box. No, it doesn't. But what it gives you access to, of course, is the trust in the entire system. Because when anybody was transferring money between each other using notes, when it was gold backed, you had to trust that those notes were real. You had to trust the person was giving you them hadn't just drawn them in their drawing room, and so on. So this meant that there was always an element of trust there. And when we moved to the kind of fiat currency, and that's what it means. When we moved to fiat money, it meant that the entire system was based on that trust of that being worth something, and that would be backed up by the government and all the rest of it. So that's what fiat money means. And that's a big phrase, fiat money, a big common word used with crypto traders and stuff, because they really understand the difference between regular money and fiat money. But the only reason a dollar is valuable is because people say it is. That's the truth. And that's fiat currency. So what does fiat mean? What does fiat mean? It's actually a Latin word. And it means let it be done. Which is pretty cool. And everybody watching along has probably just learned something, even if you were a finance expert before today. Fiat money is Latin for let it be done. It's government issued money. And, as we've kind of already said, it's backed by government decree and our collective belief. That's two things, right? The government says it's legal money. Government says it's legal money. That's what it says. There you go. That's legal money. You might think that's an odd thing to say. It's real a thing to say. When somebody says it's legal money, legal tender, it means that a lot of things. For one, you've got the right to pay your taxes in that money, as opposed to sheep. Sheep aren't legal money. So even if you had $1 million worth of sheep and you turned up to the IRS and said, I want to pay a $5,000 tax bill, they wouldn't accept your $1 million worth of sheep, no matter what it's worth, because it's not money. When the government said that this is money, it also said that that isn't money. Gold isn't money when the dollars became money. So that was kind of what it was. And legal tender works as exchange across the nation and so on, and is accepted by governments and has a consistent value. But that is way less important than the second thing, which is all of us, our collective faith in the money, our trust that everyone else is going to accept the money that we have in our pockets. And that's the system that works. And the integrity of those managing the system, well, that is actually absolutely vital, because if that trust fades, then the story changes fast. A few weeks ago, I spoke about the impact of the Fed on the economy, and I explained how the Fed's trust, the people's trust in the Fed, is the greatest asset that the value to the American dollar has just now, and that was under threat, which was actually affecting the value of the US dollar. And I explained how all that worked, and part of how that's part of Trump's plan, and it's a valid plan, right? And it's one of the only things that you can do. If you look back 2 weeks ago, I explained it all during my video about what is the national debt, I think, right? I think that's the one I did it in. So if they lose trust in them, the story about what the money is worth loses value really, really fast. So you can't lose trust. So it's really imperative that, like, the Fed head Jerome Powell remains really consistent. So, like, when you're looking at things like the story here, the Fed saying it will hold strong, surely it's a headline. There we go. So when the Fed is like looking to hold steady and it seems kind of like boring and not moving with the times enough, or being pressured from outside factors such as Donald Trump, who calls Jerome Powell Mr. Too Late, it also remains imperative for the entire world that Mr. Too Late, Jerome Powell, is very much trustworthy to be able to make the decisions that actually give the money value in the first place. And we see that reflected directly in charts like DXY, which is because it's known affectionately as Dixie, and it's the dollar index chart where it's measured against the value as a basket of 6 currencies. So that money in your pocket is the biggest power source in our shared story, and the faith that we place in it is pretty wild, right? It's pretty wild. If you, as an individual, sovereign or otherwise, citizen of, for instance, the United States, wanted to conduct a revolution, there's a very old school idea in your head that it would require you to use guns, and which is like maybe perhaps enshrined in the Constitution, in the Second Amendment, and so on, stuff like that. But that's very old school and wouldn't actually work. You'd all be arrested for being traitors first. But if you actually wanted to really take down the country, the way to do it is to lose faith in your own currency, and to lose faith in the things that give your currency trust, such as Jerome Powell and the office of the president and so on. So that it really, truly, there's an amazing power that we all share. It's spread so thin, though, that not one individual kind of person isn't likely to ever affect the our collective belief. But together, we are the ones that make the money worth anything at all. It's something that people don't truly accept and understand, but I'll just say it for like the 4th time in a row. We, you and I, are the ones that give it a value. That's where it comes from. That's what fiat money means. Let it be done. So what do you trust more, paper or promises? You can stick that word in the chat right now if you want to say which one you trust more. Put it in a comment. So the fiat system, built so heavily on collective belief and government backing, right? What are its actual day-to-day working parts? What gives fiat money its mojo? What actually gives, what's the magic secret sauce? What gives money its power? It's not magic. It's a formula, and I call it money's secret mojo, and it stands on 4 crucial pillars. Okay, 4 crucial pillars. Get this right. Money works. Get them wrong, and it all gets a bit wobbly. The money has 4 secret powers. Pillars. Pillar numero uno is the absolute bedrock. Can anybody guess what that is? The word starts with a T. 4 secret pillars. The first one is trust. Trust. Our collective confidence in the system, the issuers, and each other. No trust, no value. Simple as that. Pillar number 2. Can anybody guess what it is? I'll tell you what it starts with. It starts with an S. Scarcity. That's right. It's a word that, if you're an economist, you will know all about. But if you've lived a life, you'll also know all about it as well. If money actually grew on trees, it would be worthless, right? It totally would be worthless. Money doesn't grow on trees. It might seem like it sometimes when the central bank goes brrr, but actually it doesn't grow on trees. There is a scarcity to money. Yes, I know this is done on the US money supply chart, and the amount of money that exists in the world is so many trillions of dollars, it boggles the mind. But there is a scarcity to money, and that is the second core pillar to how this whole thing functions. Literally, if it grew on trees, it'd be worthless. So central banks do a constant tightrope walk to manage the money supply, which is why I'm doing this presentation on the money supply chart. It's all about that controlled balance. Pillar number 3. All right, this one starts with a U. Again, that's an economics term, or it's a smart person, big word term to do with how useful money is. This word is utility. Utility. You got to be able to do stuff with money. Now, money works so well. We discussed this earlier on with like the chickens to axe ratios, but it's more than just that. You can pay your bills, you can pay your tax, you can buy your coffee, you can lend it to people, borrow it. The more people and places that accept money, then the stronger its mojo is, which needs to be a universal language of commerce. Now, if you go to somewhere like Iran, which is like a sort of mortal enemy to the United States, or close, I don't know, not that, it's actually really quite similar to the United States, and 90% of its anyway, whatever. The Iran, right? You've got like 3 currencies in Iran. You've got the common currency, which was the old school, that's what they used to use, and they got Rial, which is just basically like a second layer cryptocurrency on the original core currency, and it's what people use within the country to trade to within the country. And on the international stage, they use the common one. The reason they use that within the country is like you see in lots of countries like Cuba or anywhere in the world where they've got kind of like they've had high inflation in the past and so on, and they've got their internal currency. You also see as well in countries that don't have the high inflation, like deflation countries like China. They've got their own kind of currency, like the renminbi, as opposed to the yuan, so on. They've got these things, and that's how it works. But the third one that they have is the US dollar. Now, the US dollar is accepted literally everywhere. They'll be crawling over each other to take your US dollars off you. The US dollars are worth more than the local currency is on the exchange rate and anything. If you just walked into a shop, they'd be like, oh, I'll give you a discount if you've got US dollars, for sure. So certain currencies got stronger strength, and the US dollar is way stronger than the Iranian rial, and there's no 2 ways about it. And one of the reasons why that is, because you've got to be able to do stuff with it. And if you had a pocket full of Iranian money and you went into anywhere else in the world, you might struggle to get it exchanged, never mind be able to spend it on a cup of coffee. So this makes a universal language, and everyone in the world knows what that means. And that's because there's a universal language nowadays, and it is, of course, commerce, money. By the way, incidentally, as it happens, if you look back at the way humans evolved over the years, this is something you probably, I don't know, lingua francas exist, and like the current one is of course English, and a big reason for that is commerce. You look back to like the times of Magellan and so on, there was of course other lingua francas. You'd have had a couple of different ones. Latin became a big one because of the church and so on. You go back even further, you've got like this place called Skara Brae in Scotland, that's up in the Orkney Island, which was discovered to be a settlement when people thought, because we don't really know our own pasts yet fully, we're still to really fully discover the full archaeological record of what ever happened. They thought that when we were human hunters and gatherers, and we couldn't have built houses with stone and so on, and stone roofs, that that's what they thought was happening. But they found a thing in Skara Brae back 5,000 years ago when we didn't think that we could do this. Stone walls, stone houses, slate roofs, commerce was happening there, jewelry, so on, carvings from all around different parts of the world, the accessible parts of the world, far away as the Mediterranean, up there in Scotland 5,000 years ago. And you think, if we need like Duolingo, 10 years of learning a language in school, and everything else just to be able to go to France and ask for a baguette, how did people 5,000 years ago, when they didn't even have maps or compasses or even like, bicycle repair kits, how did they do it? And the answer, my friends, is what motivates the lingua francas of the world, and that's of course the universal language of commerce, baby. It always has been, and that's super interesting stuff. And you can look into all of that, look up those words I was saying, and find out all about this interesting stuff if you want. Now the fourth one, what do you think it is? This one would be what some people think is the real power in the world. It's not. This is all as a symptom of things like money, collective belief. And when you've got money and you've got collective belief and people are working together in a society, the thing that kind of holds it all together is law. And the law says that legal tender law means it has to be accepted for debts. Okay, so what does legal tender mean? And a lot of people, basically everyone, gets this confused because they don't really know what legal tender is. They think, oh, this is legal tender, you have to accept it. People don't have to accept money. If you come in and you're like, give me this loaf of bread, here's $1, and you say, I'm not selling you that loaf of bread, they say, oh, that's legal tender or whatever. That nonsense. Legal tender is simple. It means it has to be accepted for debts, which is why when I was saying that you're able to pay your taxes with it is important, because taxes essentially are debts to the government. But also what it means is that if there was a debt that you had to somebody else, that you have to accept that as a way of paying it. You have to accept it, as opposed to something else. What could it be? Such as a pound of flesh. No, that is no longer, that you can see. So back before there was fiat currency, you could have got yourself into a deal. Say you're in Venice, for instance, dealing with some pesky merchants. They might have ended up saying, right, well, okay, I'll sell you that for a pound of flesh, and you get into a deal with them, and then you owe them a pound of flesh. That's a bit of a sticky wicket, right? You'd be much happier if you had something called legal tender instead. And how would legal tender work? Well, it would mean that it has to be accepted for debts. That's what it means. Boom. You've learned at least 2 things in today's show, at least 2 things. Pretty nifty, if you ask me. And that gives money a foundational level of demand. So what does all of this add up to? And this adds up to fiat currency. So a lot of the time, whenever you see somebody who's maybe like a sort of sovereign person, taking their license plate off and says, no man needs no government issued ID to drive on these roads, instead of having a license plate on their car. And if that same type person also thinks, yeah, we should go back to the gold standard because of all these things, then what they're actually looking to try and do in doing that is they say, I want to take away trust. and I want to take away scarcity in terms of how money actually works. I want to take away the utility, and I want to take away the law behind it. And so we don't have fiat, and instead you can pay me for 3 chickens for my axe. And you can see just how much of a massive step backwards that is in every element of what it is to live in a society. So fiat money does an awful lot for a society in terms of securing its peace and stability over the longer term. So it's quite an interesting thing in the modern invention that goes beyond simply just the debasement factors and so on that I spoke about last week, which is incredibly interesting, and you should check it out if you haven't already, around the National Debt Show and stuff. So there you have it, right? So trust, security, utility, trust, scarcity, utility, and the law are the 4 pillars of money's mojo. If you don't have one, then the whole thing collapses. What in the chat, let me know in the comments and this video if you're watching it later on and so on. What's the most vital one today out of those 4? What is the most vital one today? What do you think? Stick it in the chat box. Let me know. Okay, so those are the major pillars for money that we use today, right? And we all know them: trust, scarcity, utility. Some people say scarcity, right? So trust, scarcity, utility, law, and that's all 4. But now there's a new force trying to shake things up, a new one, and it completely changes all of this. Well, it adds to it. Can you guess what I'm about to say in the chat box? Can you, folks? Can you guess? Bitcoin, Ethereum, and thousands of cryptos. They're the future of money. They're here to set us free or not. That's for you to decide. They are super volatile and they are super risky asset classes. But let's put them up against these 4 factors, which is what gives money its mojo, and see how it stands against that test. So let's put them to the money mojo test real quick. First one, trust. Do you trust crypto or not? It is quite complicated. Code, do you trust the code? The creators of the crypto, they're going to rug pull you and so on. Exchanges, it is complicated. However, one of the reasons why people love Bitcoin, of course, is because it's completely decentralized and nobody can just get in there and fiddle around with the code. In terms of the creators, like they're kind of anonymous people that just put something out into the world back when it was worthless, and it's become worth something since then. And they don't even exist, necessarily, so to speak. There's a single person, Satoshi Nakamoto, but of course, actually, it was a group of coders back in the day. But it relies on this code, and it is what is known as trustless, which is really interesting. Crypto is trustless. And the idea behind the cryptographic currency was, of course, to try and get around the idea of trust, because in 2008, Satoshi Nakamoto, the guy who invented Bitcoin, which is probably a team of people, looked at the mojo behind money and they asked questions about trust and is it truly trustworthy. They asked questions about the scarcity of it, as they watched the financial system collapse. They asked about the utility of it, and does money in terms of fiat really serve the utility that people necessarily need or not? And they thought about the law, and the law, of course, is very similar to fiat in the sense that it only functions because we all believe in it. And to get around that, it created this hard digital currency called Bitcoin. However, that also has its own ups and downs, right? Such as the way that it creates so much more friction in terms of people's willingness to spend it. The major problem with Bitcoin as a long-term mechanism for economies to function is the lack of inflation in a Keynesian model. Without the Keynesian model, to go back to the way it used to be, created huge problems of inefficiency, the low velocity of money, and its inability to be used in a centralized way to mitigate counterparty problems was what led to decades-long recovery in the 1930s stock market crashes and so on in America. These things had such a long pain process afterwards. If we use this as our main basis for all economics in the world, during COVID, it would have been quite hard because there was no monetary supply mechanism, which means that realistically, when economists think about how Bitcoin and so on would be used, it would be through a fractionalized system with banking license, able to print out a fiat version of the underlying asset, much kind of like whenever gold was separating out from being actually backed 1-to-1 with the dollars. Anyway, we'll not get too much into the digressions there. The next thing here is, of course, in terms of the features of crypto, which are, you know, incredibly game changing, is scarcity. And when we look at the scarcity factor with regards to Bitcoin, it is insane. Like, crypto scarcity is unlike anything we've ever seen before. And people like to make a comparison for Bitcoin with gold, which is crazy because gold is found all the time. You might think it's weird to say that because you've never heard of this happening, but actually, if you were to just go and Google it right now, you'll find about the gold supply and finding big deposits of gold. It happens all the time. Happens all the time. And if you think about it, you'll know that people go to rivers and pan for gold and stuff like that. So they're finding new gold and adding to it. That can't happen with Bitcoin. With others, yeah, it can happen, right? And that changes the dynamics there. And it can also happen, of course, with stable coins. You know, the actual scarcity of them is linked directly to how much those are backed. So Bitcoin, it's got a hard cap, it's baked in scarcity, and that is also, at least, it being what's known as a deflationary currency as well. New ones pop up like mushrooms after the rain, of course, with cryptocurrency, but it's not real scarcity when it comes to those necessarily. And then the big one, of course, that people talk about with crypto is it got utility. So crypto utility, can you buy groceries, pay rent mostly, you know, but not really. And you'll have seen jokes and movies, adverts, videos, whatever about this on TV and all sorts, you know, crypto. That's such a joke. You can't pay for your groceries in crypto and all that. That's really funny. It's true. However, the thing with crypto as well, in terms of utility, is incredibly powerful. If you look back in my video catalog, you'll see at some point you'll find a video where I'm explaining how the banks, the European Central Bank and Bank of England, have made vast progress towards building cryptocurrencies that are central bank digital cryptocurrencies in order to exploit the utility factor. So if you take one example, such as the repo system that allows people to take their treasuries, T-bills, which is something I explained in the past, give them to the government, get fiat in return, and then swap it all the way back round again for their T-bills in a repurchase. agreement. That system is incredibly clunky when you're not using something like cryptocurrency that has the built-in utility that has allowed it to spin out to things like DeFi. And of course, all these other ideas. So it's incredible. It's actually incredible utility, incredible. And in terms of most places where it's accepted or isn't accepted, you could also replace huge wings of where money is put into real utility on the day-to-day basis. And while you might not be buying your groceries with it, funny word that, groceries, isn't it? Nobody says groceries anymore. What? You may not be able to buy your groceries necessarily with it, but you can certainly do an awful lot with it. So it's a very big question mark, that one. But you can see how every single one of these is game changing. And then, of course, when it comes down to the law aspect of it, well, that's in flux and governments decide the law. But there's a key component here is, of course, the fact that this is trustless and works on its own open source, completely decentralized system, which means that in terms of the law, it is really irrelevant due to decentralization, which, by definition, law requires on a centralized source for this is an anathema to law, is the fact that this has not got any centralized power and nobody owns it or anything around it. But we have seen that there's some bits when it comes to crypto utility and law which have actually been quite interesting, because we can point to the great experiment happening in El Salvador. And I'm not talking about prisons. El Salvador has changed it so that Bitcoin is a legal tender in El Salvador. It is legal tender in El Salvador, which means you have to accept Bitcoin for debts that people have towards you. You have to accept it, because that's the only thing that legal tender really means, which you learned in today's show with me, Rocky Outcrop. Cool, huh? Then my question for the audience here, crypto, right? A money revolution or a high stakes asset class? Is the jury out on this one? What do you think? Is crypto the future of cash or a completely different game? Will we just simply see fiat evolve, into these crypto things? So crypto replaces the fiat, so it increases the utility of fiat, and the law still controls it, and people only think it has value because they all just believe that it has value? Or does it flip the script completely? And I think for people out there who want to understand why Bitcoin is important and why people like Michael Saylor will spend their entire lives now just simply talking about how it's going to change everything and all this sort of stuff, you have to understand that with the disconnect between law, governments, institutions, classic means of power, and money in the only ever thing up until 2010, there was no such thing as actual hard scarcity, and it was created with Bitcoin. So it's incredible, and it is an absolute game changer, because when you look at how money works, either you put fiat into crypto, or crypto is different to fiat, because what is fiat and how does it work? And you understand the 4 key pillars, and you understand the juxtaposition that has with crypto. So, but it is, of course, one digital path forwards. What's the official sectors doing about this then? So crypto world, you've seen us talk about them, the charts, they're turbulent. Of course they are. We've got a whole section in the Discord for chatting crypto. We love it. We trade it all the time. governments and central banks. Oh, what current price of Bitcoin? 97 grand. You know, say that now for anthropological value. So yeah, so governments and central banks are not just twiddling their thumbs on this one. They are looking at their own digital future. I've already alluded to this with regards to the repo case, and there's an awful lot to the story with regards to central bank digital currencies. This is your official currency, but purely digital, direct from central banks. So the digital dirham, the digital dollar, the digital pound, the digital yuan. It isn't just private crypto. This is the state entering into the digital money arena, and that brings a whole set of massive questions about efficiency. As I explained as well, great use cases for taking the utility from DeFi and applying it to existing systems to increase the efficiency, reduce the cost, and of course, hard code transparency, or at least traceability. There's a question of inclusion as well, though, because does this mean that everybody can have access to it? Does it increase inclusion? Does it help or does it not help? There's a big phrase from crypto which is to do with banking the unbanked. And if central banks could get involved in it, is there going to be restrictions over perhaps access? I mean, we've seen in America, for instance, over the last wee while, huge uptake in a sort of change in the rights that people have who are perhaps undocumented migrants and so on. Now, that's a political thing, and for better or for worse or whatever. However, you know, in a world where you can keep a dollar bill in your pocket and you know you've got a dollar bill in your pocket versus a world where you rely on a digital app to give you access to your money does raise questions about things like the confiscatability of your money and who has control over your money. Whereas a dollar bill in your pocket is a dollar bill in your pocket. So that has questions about inclusivity as well, and of course, privacy and control. So we're seeing global discussions about this, and the US dollar's under pressure. We saw chat recently saying that there will never be a US digital currency from some people in the US Congress, I think this week. I think one of them said, I think it was this week, if not last week, but this week, asked, will we ever have one? And his basis for it was we have to make sure we never ever look like China. That was the basis for it. I think that you can see that from what I'm discussing here, there's a heck of a lot more to this story than whether or not you look like China. That's certainly not a decision-making basis for this. But the answer, of course, was no. We're not going to do that because we don't want to look like China. Gary Gensler is rolling in his digital grave. Listen to that. We're seeing global currency. We're seeing global discussions, right? So that one with the dollar. And there's debates happening right now over US CBDC, which would be the letters for US central bank digital currency. And there's also, of course, debates about whether or not we just kind of liberalize crypto regulations and let other things fill the gap, the utility gap, and retain the dollar as the dollar is today. So this is the debate that we have going on right now. And, where is all this heading then, right? Covered an awful lot of ground to get to where we are right now in the discussion, where we've actually gone back to trading. We've gone back as far as trading axes and seashells because they became shiny, to selling gold, to trading gold, which was divisible, to making pieces of paper that said how much gold you had in a box somewhere you could give to somebody else, that made it so that it was easily transferable, to taking away the gold in the box, to just relying on the piece of paper and building up 4 pillars to make that system work. And then we've looked at digital cryptocurrencies, both the mainstream kind of centralized replacements for fiat, if you will, that could come from central banks. And we've talked about purely decentralized, set up by anonymous people, open sourced it 10 years ago, never touched the money in their wallet, and so on. Legends in the financial world, with Bitcoin and the things that followed on from it. We've got so far to have even been able to show and prove to people, explain why Bitcoin is different and how it is such a threat and how it's a game changer. And my goodness, you've learned an awful lot so far. And we're at the point now where we've earned the right to ask the question about what's happening next. Are we in a full-blown money revolution, right? Maybe it is less of a revolution, but a really rapid evolution. Future of money. Evolution in hyper speed. Few things are clear. Digital is the direction of travel, whether it's your vinyl that became CDs, that became mini discs, that became MP3s, that became Spotify, or money. Digital is the direction of travel. It has been for money since way back in the 60s when the first cash machines were opened up. That tension that exists between centralized CBDCs and decentralized ideals like BTC will be a defining theme in the near future. The evolution of money, it's happening right now. These are the central defining themes of money, and the unchanging truth, right, remains. There is a principle that outlasts any technology and has been is the fundamental pillars of any money. Trust, stability, and utility always win out in the end, and there are always the most efficient use case, the truest use case of money, and it is absolutely what direction we'll go in. It's just about finding the ways of aligning the trust factors. Trustless, very good, all good options. Stability, and the utility, and getting all these things working together, whatever form money takes. If it can't deliver on these goals, then it's just a passing fad. Whatever form it takes. Seashells traded on the beach and then traded in the city, divided up. Pieces of gold, the first, and metals, the first kind of divisible currency. People used to even trade in stones, large stones, monoliths. And you divide them up, you lost a lot of value. It's true, though, that was actually a form of currency for a while, megaliths. Salt with the Knights Templar, the first international banking system which used salt, right? First international currency, the first fiat type money type of thing, which wasn't fiat really, where they had bills and notes, salt stuff. So we then moved on past that to gold, and we moved past gold to notes and banks and onto cryptocurrency. And at any given time, the thing which was killed off was the one that had the less trust, the less stability, the less utility. And the thing that then kind of paves the way for the next one is how law operates around it. It's kind of that fourth factor, which ties so directly to us and our belief. And that's why I pointed out that law only exists because of our collective belief in it, the same way that money does. And indeed, even if you said that cryptocurrency, even with its hard money supply and so on, was to become the new currency, it would still require the law to actually enable that to happen if you want to live in a world that has society, because that's the fundamental principle of liberty, and it's what we all fought for, is the society that we live in. for better or for worse. With current inflation concerns for 2025, the stability is front of the mind for people, for everyone, with wars happening in India just attacking Pakistan. That's the big one. I haven't talked much about India, Pakistan today. Regret putting it in my video title, given how much ground we've covered, and I've not got the time for it. The stream is already 2 hours and 40 minutes long, so I don't want to be clickbait, though. Just so you know. This is not clickbait. Here we have Pakistan vows to retaliate after India launches military strikes, and this is in the Financial Times, so it has financial implications, and that's the current backdrop. And it's definitely was not like a clickbait thing, but that's as much as we've got time for, I'm afraid. So with the current concerns for 2025 being inflation, that puts stability in the front of mind for everyone. And the why of money is to help society function, and that always remains. And society only functions when we've got laws and so on. Money is a mechanism for transfer of value between people, and it creates a second layer of utility in and of itself by facilitating a means of exchange. And it's exchange between what? Between members of society, and it helps the function of society. All these ideas, which kind of have some idea about bringing down society as we know it, won't work, because the enduring truth is that trust, stability, and utility is always key, and those are only functions within society. They're emergent from, and of course, dependent on society. Otherwise, they don't have any value. In which case, it wouldn't. This is the only path. So, from bartering goods to coding digital tokens, money's story is our story, and my kind of conclusion towards this would be that we need to have your voice in this discussion, because it's our story, and it only exists because of our combined belief in it in the first place. It reflects our ingenuity and our need for systems and our incredible capacity for shared belief. It's our story, and we should write it wisely. And understanding this is not just for economists, it's for all of us, right? Because we're all co-authoring the next chapter of money. I'm genuinely keen to hear your take and what fascinates or worries you about money, where money is heading, and what does value really mean to you. And I want you to drop your comments and your thoughts and your questions in the chat box, in the comments below this video, and let's figure this out together. At this point, looking back over the topics that we've discussed in this video today, when we get back down to the bottom here and we revisit the question, wherever it is, money, what is it? You tell me. Do you have an idea about what money is today, now, after watching this, which you didn't have before? Justin, in that poll in the chat, thank you to everybody for taking part in the polls. It makes it a heck of a lot more fun when people do take part. We had over 100 votes there, so it was a really good poll on the channel. Let's see the results. 72% were happy with the call, 20% wanted to see the results or didn't know, and the ones who said no, 7%, not a massive amount. I've noticed the chat box has been banging at times tonight, having a great time, because the content on this channel is, of course, the very, very best content on YouTube. Being here and doing these shows with you on a weekly basis is a massive, massive privilege for me, and I hope that you feel that I meet you at least halfway with what we're doing. And if so, then perhaps you'll find some value in some of my other videos. You check them on your screen just now, perhaps maybe showing up, who knows, maybe not, maybe not. But We do so much together, guys. We build our futures together, and it's this here which gives us the tools and the power to do so. I'm really impressed with everybody's dedication to becoming better at all of this, and I can't wait to see what happens for us in the future. So be sure to be a part of it. Hit that notification bell and come back for more. I'm Rocky Outcrop. Love yous all. See you next time.